Hey guys, good afternoon, everybody. Today is Tuesday, April 18th. It is 2:01 right now. Our scheduled mentoring sessions for 2 p.m. So I'm going to go ahead and set up this room real quick, and then we will get started with our analysis shortly. So if you guys have any questions, feel free to put your questions in the chat. Otherwise, I will take questions as they come in. So we had a couple questions here lined up for Tom, I believe. We'll go over those first, and then we'll knock out anything else that you guys need help with. All right, there we go. One last thing here, and we're good to go. Let me get this link sent out to you guys here in the premium. All right, I'll give a few moments for people to make their way in. We have a couple questions here from Tom. So Tom said, my question early in the stream about the strategy to pass the challenge was more about how you would manage your risk and stuff like that to achieve the 10% in a month or faster. So there's a couple more questions here, following up with that. I'll get to that shortly. Hey, Martha, how's it going? But anyways, guys, good afternoon, guys. It's Tuesday, April 18th, 2:04 right now. Looks like some of you guys are starting to join in. So I'll give it a few more moments for people to join. But again, right here, we have one question from Tom. So Tom basically, I'll break it down right now as soon as more people join in. So I want to get started too early and people are going to ask again or ask something similar. So let's see. All right, perfect. Yeah, LW, I know you're Tom, so we're good. Yeah, so all right, let's just start off with Tom's question, and then after that, Martha has a question regarding speculatives and liquidity pushes. Yeah, we can go over that too. So let's just start off with Tom's question here. So Tom said, let's assume we only take trades from the live. What would you do if you had to start over a challenge? Okay, so let's see, example from Tom. Tom asked, if you get a couple trades, let's say winning trade with lot size of 100, then increase your risk to lot size of 150 or 200. What would you do if you had to start a challenge and taking only the trades on the live? So I would stick with 100 first, because there's no guarantee that there's going to be less trades, or there's no guarantee that there's going to be more trades, right? So you don't want to hop into a challenge and then increase your lot size immediately, and then the trade doesn't go your way, right? Or the market doesn't go your way for that week. Because if you guys have noticed, typically during a trading month, there's like 1 week that's usually a bit iffy. Let's see April real quick. I think that we've had pretty decent months, or pretty decent weeks for the month of April. Let me scroll up real quick. So for the first week of April, we had 5 wins, 0 losses. Week 2, we had 5 wins, 1 loss. I don't know what's going to happen this week, but we currently have a couple of trades that I think we took already. Let me check. So we had, let me scroll up to Monday. All right, we had 1 trade on Monday. And that's pretty much it for now. A lot more trades can come up tomorrow because we have news tomorrow and news on Friday and Thursday. So I don't know, this might be the slow week, but if you do the math, I mean, basically we have 11 wins and 1 loss. So, back to what Tom was asking, he's asking basically, like, would I increase my lot size to 150 or 200 or even higher? The only time I would increase my lot size if it's absolutely necessary. So earlier in your challenge, I would just stick to minimal risk, right? Or not minimal, but I guess like what I'm taking now, 100. That's like basically average risk, if not minimal. I would take those trades. And then if you get closer to the end of your challenge and you have to take more, then, obviously you can increase your lot size from there. So like the way I would do it, Tom, is I would probably trade for like maybe the first 3 weeks with 100 lot. And then say I'm like up like 6%. If I'm up 6% by the fourth week, then I would just continue using the same lot size because they'll just give you an extension. There's no rush, right? You don't have to finish it within a month. I mean, you can, but if not, then they'll give you an extension. So if you're up like 6% by like week 4, I would just continue to use the same lot size. However, say for example, you're down 6% or you're down 4%, right? And you got to make your way to break even. Then in that case, I would increase the lot size because it's make or break at that point, right? So you're in your fourth week and you're down like 4%. Then in that case, yeah, you have to increase the lot size because you're not going to be able to make it a break even or to even, maybe possibly pass within that short period of time. So there's no rush to pass the challenge. I think that's a problem with most people. They try to pass the challenge by tomorrow, right? So that's not the way to do it because you're just getting lucky. You can increase your risk, but say you lose that trade, then you're going to be in a deep hole from the very beginning. So it just doesn't make sense to do that. So that's the way I would personally do it. I would stick with 100 if you're on a 200K count, and then from there, just go through the motions. If you pass week 2, week 3, and say you're like at 6% profit, then at that point I would just stick to with the 100 lot because you'll just keep increasing your profit day after day. And then once you get to like your last week and say you're like 8% in profit or 6% in profit, then FTMO will give you an extension. The extension, I believe, is about 14 days. That's what I've seen and that's what I've heard. I don't think I've seen, yeah, it's 14 days. Yeah. So Tom confirmed it. It's 14 days. Typically it's 14 days. And then I think they'll even give you a second extension. So like, say, for example, you get an extension and say you're at like 9% or 8% and you're still not there. And then they'll give you like maybe another 14 day or maybe a 10 day from there. I'm not sure exactly because I've never had to go through that, but you can always just ask FTMO directly. So if you guys have any direct FTMO questions, you guys can always go and message FTMO directly and it'll give you a proper response. But from my knowledge, I don't necessarily see it as a problem. So that's basically what I would do, Tom. I would stick with the normal lot size. And then if you need to, like only if you absolutely need to, because the thing is you don't want to keep increasing your lot size like that in the future, because if you do that, then you're going to develop bad habits, right? So I would probably just do your normal lot size, risk about 1.5 to 3% risk. And then from there, you can always just multiply the accounts. So that's why I would recommend just sticking to like normal risk. And then at that point, that's when you start to add more accounts to the copier. So like for me, I'm doing the same risk across 5 or 6 accounts. And then that's pretty much it. Yeah. Also, Tom also mentioned that you get a free retake if you were in profit, but don't reach your 10%. So there's no reason to rush it because even if you don't, pass within the first week or the first 2 weeks, you're still entitled to a free retry and or an extension. So what I recommend is to just take your time. You don't have to pass within that month period. You'll have another opportunity to possibly pass it if you don't pass it within the allotted time. So does that make sense, Tom? That's what I would do in my perspective. I would never rush it. If you're rushing it, your odds of failing the challenge are more likely than not. So I would never recommend rushing it. I'd recommend taking your time. If you have to take the full 30 days and get an extension, I would probably do that versus, increasing your lot size immediately and then possibly digging too deep of a hole for yourself to get out of. I mean, you can do, if you're confident, then yeah, do it straight out the gate. So my response is what my response would be to like everybody else. for me, obviously, I don't really lose very often. So I could go max lot size if I wanted to. Like if I had to do a new challenge like tomorrow, I would probably use a 200 lot or a 250 lot. Because I know I'm confident with my trades. It's different for like other people who are not confident, right? So like if you're not confident, obviously you want to use proper risk and you don't want to over leverage, because then you can either blow your account really quick or dig yourself too deep of a hole to get out of. So let me see. D had a question here as well. So D said, isn't max lot size on FTMO 100 lots? No, it's not. It's 100. It's max 100 lots on other brokers, but not FTMO. I've used bigger lot sizes before, unless they've changed it, but I've used bigger lot sizes before in the past. So I don't know what the max lot size. The max lot size is gonna be based off your leverage. So if you have like 1 to 100, I think on a 200K account, max lot size might be either 250 or 300. I think MFF has a max lot size though. So MFF does have a max lot size. FTMO doesn't. I don't know about any other brokers, but FTMO, like I've used them in the past and I've taken bigger lot sizes. So 100 is not the max with them unless they've changed it. Let's see. All right, so I think that's it for those questions right there. If there's anything else that you want me to go into detail with, Tom, just let me know. But I think that's, that's the approach I would take. I would use proper lot sizing no matter what. I wouldn't necessarily increase it unless it's absolutely necessary. Because if you do, then you're just going to develop bad habits. Yeah, no, I would stick to the normal lot size, because for me, there's no rush. The thing is, like, I've been trading for so long that I know that trading is a long-term game. So like for me, I know that you're going to have good days, you're going to have bad days. The worst case scenario is you increase your lot size and it's a bad week, because at that point you're just going to have loss after loss, and then you're going to dig yourself a pretty deep hole. But I would just stick to a universal lot size. So if you decide to use 100 like me, then just stick with 100. If you want to use 150, then that's fine too. So with my 100 lot size and a 300 pip stop loss, that's a 1.5% risk. Let's see, 200. So I'll tell you what's the max lot size that I would use. 200. So the max lot size that I would personally use would be, I think, a 200, right? Let me check. Yeah, 200 lot size. So that's the max lot size I'd use, because if I use a 200 lot size and I'm risking 300 pips, then my risk is going to be 3%. I wouldn't go over 3%, because if you have 2 losses, you're going to blow your account, because you'll go past the 5% max drawdown for the day. So that's pretty much what I would use max. I use between 100 or 200. Never go over past 200, unless you're going for like 1 trade a day. If you're doing 1 trade a day, then you can maybe increase it to 250. But even at that, you're kind of pushing it. There's just different ways to apply it. But yeah, that's basically how you do it. Because if you're doing that, so again, if you're doing a 200 lot, then your profit potential now it's going to be 2,000, right? Yeah. So if you do 2,000 divided by 200,000, you're basically going for a 1% profit potential. So sounds about right. All right. That's it with that question there. Let me go over to the next question. So question over here from Martha. She's asking, can you go over how you take your specs and liquidity pushes? So there's not really any speculative trades here that I specifically take, aside from like buying the dip. Again, Martha, so I think I'm going to show you this, but I don't think this is something that you should personally do, because I know like your consistency has gone lower and lower and lower as time has progressed, because you keep doing like something different. So I'm going to show you how I do it, but I don't think you should specifically do it, because I know you're working with Sisu, and Sisu thinks that like your consistency is not good right now. Like you're not listening to anything he's saying, kind of. I personally, I don't know, because I haven't been mentoring you, but C6A has been helping you and you haven't really been very consistent. So I'll tell you, but I don't think this is something you should do personally, because you're still kind of struggling with the basics of the strategies that we're applying. So, I'm just looking out for you and I don't want you to blow your account or make any mistakes. But I'll show you like what I'm doing since you're curious. So most of the speculative trades that I take are based off strategies that we're already applying. Like most of them are V1 variations, like the ones that I took today. I'll show you the ones that I took today, but I can't really show you stuff in detail unless there's something specific that you want to see, because speculation is speculation, right? There's no specific strategy behind it. You're kind of just using confluences and other strategies that we typically apply. Okay, so you want to see liquidity pushes. All right, so I'll show you that. I can show you the other stuff, but the other stuff I applied from today was just variation V1s. They're not really speculative trades. They're just speculative because they weren't official trades. That's why we call them speculative. But for the most part, the trades I took today were this one right here. But there was other confluences that were involved. So like there was a V1 variation right here where there was a double body rejection, and it was also off a lower low. And I think we also had a zone down here. So I don't remember what exactly were the extra confluences, but the two trades that I took today were these two right here. These are the two speculative trades. We took one trade that I don't think we had any official trades today. So I had 3 trades today myself, or just 2 actually. So I had 2 trades today and there were just these 2 right here. First one was right here. It was a V1 variation, but I had other confluences here. I think we had a zone around this area. Yeah, we had a zone around this area, and I think I looked back. Or honestly, I can't remember, but that's what I took. So the first trade I took over here was a V1 variation. I think we also established, I think it was on a 10. Okay, so this is where it happened over here. So let's mark this up. Okay, so there was a lower low here on the 10-minute. On the 1-minute here, this one was just a V1 variation. It was a normal V1 variation. I was looking for the rejection to the upside, and I took this one here. I took this one here, but and I took it with no TP because I was just going to write it up. I was looking for that reversal back to the upside. I took this up and I saw this big red candle. I just closed out manually. So I was going to hold it longer, but I ended up just closing it. That's where I locked in this 490. That's my first trade. It's not a speculative trade. It's just speculative because it's not official. But this is just a V1 variation. V1 variation because there's a double body rejection, pending buy signal. And I use other confluences here. This one wasn't a very strong confluence. This one down here was actually a very strong confluence. So I saw another V1 variation right here. But the reason I took this was because it bounced off this lower low here, which was on the 10-minute. So if you guys remember, like pretty much every morning, I draw up these blue lines, which are lined up at the higher time frame lower lows. Basically, lower lows that align with other time frames. So this lower low right here aligned with a 10-minute, it aligned with a 5-minute, 1 hour, and 4 hour. So I knew this was a strong zone right here, because this lower low was it was just flush with pretty much all the time frames. So for this one right here specifically, I took this because of the V1 variation, and then I pretty much just wrote it up as price pushed up from there. So the V1 variation closed right here. I took this buy here. I basically bought the dip, and I should have held on to it longer because I could have made a ton of profit off this. But being the conservative trader that I am, I ended up closing out for 100 pips right here when price pretty much blasted up, and I saw the rejection off the sessions right here, and that's why I took the trade. So like for example right here, price is pushing up. I saw the rejection right here off the session, and that's where I closed out. So that's where I made the second trade right here, where I made 1,020. So this right here was the second trade. So these are both of the trades that I took today. They're speculative because they weren't official, but they're not really speculative because they're V1 variations. The only thing here with these V1 variations is that they're not necessarily official V1 variations, because you have to confirm the bias. and there was no bias today. So let me just pull up the V1 variation. So right here, you want to confirm the overall bias. Retail sentiment was bullish, so we wanted to take buys. That's the main reason why I took the buy there. Fundamental bias was neutral, and technicals here were pretty neutral too. Because if you look at price from this morning, the higher time frames were bullish, 4 hour, 1 hour, and 30 minute, but the 1, 5, and 10 were all bearish. So that's why I was speculative, because not all the criteria was met for the V1. So I basically took this strategy, but I pretty much disregarded the first criteria. It was more of a bullish neutral, and then everything else here lined up. So this is why these here have not really lined up properly. Well, I mean, it would have been an entry, but this here was an older, I mean, this is a new criteria. Before, when I first created the strategy, the overall bias wasn't the criteria. You're just looking for high lows, double body rejections on both sides, because you can see here that it does work, but it makes it a bit more risky. So like if you look over here and just look back at it, so look for any double body rejection, you'll see that all of them pretty much hit. This right here, double body rejection, you go for 100 pips, full TP. Again, right here, double body rejection, full TP. Right here again, double body rejection, full TP, right? So when I first created this strategy, the overall bias wasn't a criteria. I just added it there to improve the win rate. But it's not really like super necessary as long as you know what you're doing. So let's see. Martha's asking, so she said she's in a challenge right now and not doing too well, but I only take your official trades and I practice other stuff with Sisu during our sessions. I don't take anything else. So which trades did you take then, Martha? I'm just curious because we have 10 wins and 1 loss, so you should be in profit, right? So depending on when you started your challenge, you should be in profit. If you look at so for March, yeah, but so which trades did you lose then? Because I'm curious, because we had 20 wins and 3 losses in March. We currently have 10 wins and 1 loss in April. So it's like, if you do the math, it's like kind of like impossible for you to be in the negative, right? So I'm just curious. So if you can tell me like what you took, I can like kind of figure out, you know, what the issue was. But just looking at the data, yeah, so how'd you get 6 losses? Because we haven't had 6 losses in the past like 3 months. Okay, so that's the problem. Yeah, but okay, so yeah, but how do you have those losses if we don't have any losses on the results, Martha? Because you're obviously taking something different. Okay, so if your problem is late entries, then you should just not take it. And you said that twice, Martha. Look at the chat here. You said it already. So late entries, random spikes. But even if you have those late entries and random spikes, we didn't have losses, right? So I can't really help you with like, I mean, if your trades are because of late entries, then you know your solution to that is to don't take the late entries, right? So what I'd recommend is to just stop taking the late entries. I think that's your problem. I think what happens is it hits TP and then you enter after it hits TP already, hoping that it'll come back down or come back up. And then at that point, that's where the random spikes come through, right? So if you have like a specific entry that we can look at, I can kind of walk you through it and see what you did wrong. But from like what you're showing me here, it seems like it's just, you just keep entering these trades late. Because I mean, from the official entries, like if I look back to any of these trades here, they so like for this one right here, I could see where you could have maybe had a loss if you enter late because it blasted right through a TP and then it came back down. But at that point, you still would have been okay as long as you didn't enter late. So for this one right here on the 14th, I'm assuming you probably entered this trade late if you lost it. The trade from yesterday as well, that one went to full TP. The trade from, oh, these are from last week. Yeah, D said, I think the few losses I took were from high lows with huge candles that usually hold off on entry. Some of them were just entries that just reverse and lose. Yeah. Let's see, Martha. So let's take a look. I want to, because I want to help you, Martha. Like, I'm not trying to like scold you, but I want to make sure that we fix what's going on here. So let's see. Are these from today, Martha? Because we didn't have any trades today. Let me see. Okay, these trades are from the 5th. So I'll try to go back to the 5th over here. And I'll see what we could find. It's pretty far back. I don't know if we can go that far back, but I'll try. Wait, the 5th. So let me go over here to the 5th real quick. Because it shows that you took 6 trades. I don't remember taking 6 trades on the 5th. We actually didn't have any trades on the 5th. So, oh, okay, never mind. I see. So I'm looking over here. It shows that you have 5 trades on the 5th, but we didn't have any trades on the live session on that day. So I'll go and take a look. I'll see what you did there, but I don't see any trades here on our official trades because that's a lot of trades. If you took 3 trades on that day, then there's something wrong because we didn't take 1 trade on that day. On the 5th. And then on the 6th, let me see, you took 1 trade on the 6th, which hit our TP. I'm assuming this one you entered late. We'll go back and take a look at this. I just want to make sure that so we can take everything step by step. And then on the 10th, I don't have any entries on the 10th. So we'll take a look. But let me go back to the 5th and see if I can pull them up. So let's see. 5th over here. And I'm not familiar. So maybe I'm missing something, or maybe there's a trade there that I held off on because the candle was too big, like what D mentioned. But I don't remember taking anything. So I'm just gonna go back and look on the 5th, if possible. Okay, so we're back over here on the 5th. And let me just rewind to 9 o'clock. So we just have some space here. Let me go and just turn off the sessions because the sessions are pretty much irrelevant. Turn off the trend meter. And let's see what you got over here. All right, so let's see, Mark. Let's figure this out. So I do want to help you with this, of course. So let's see on the 5th over here, 7:23. I think that's the time, right? All right, 7:23. See, those are your entry came in from. And let me see what type of entry you took. You took a buy entry. So I'm looking over here at 7:23 and I do not see any entry here. I'm not sure where that entry came from. Yeah, there were definitely no buys here at all. So here's on the 5th, I'm going down between 7:10 and all the way down to 7:30, and there's like no buy entry. So I'm not sure where this entry came up from. Your first one. I mean, you won the trade, but I don't see anything here. Yeah, your chart would be EST, but you're still around this time right here, Martha, because your timestamp is 7:23. You wouldn't be taking any trades at 6:23, right? Because 6:23 would be pre-market. We're not live yet. So your trade would have to happen right here at 7:23. Yeah, but if you look at the guys, so it doesn't matter like whether you're Eastern or Pacific or whatever. If your trade came up at 23 minutes, it would have to be at 7:23 because we're not live at 6:23. We're not live at 8:23. So it has to be at this time right here. I mean, your timestamp shows when you took the trade, Martha. So it has to happen like exactly right here. Because there's unless you took this outside of the live session, that's the only thing I can think of. Because it's impossible for you to have the trade at 6:23. We're not live until 6:30, and you wouldn't take the trade at 8:23 because we're not live anymore. So your trade has to happen. Yeah, 10:23, which is 7:23 our time, Martha. Do you get it? So like here, let me explain to you guys again. Let me just break it down. See where it says your timestamp, the minutes. Your trade could only happen during 7:23 because we're not live an hour before that, or an hour after that, right? So if your entry came up right here at 7:23, there's no buy signals that are valid here between 7 o'clock and 8 o'clock, basically. I mean, there wasn't even any entries here between that time, Martha. So guys, it doesn't matter what time zone you guys are located in. What I'm looking at right here is the minute of your entry, because it's impossible for you to have an entry at 6:23, which you would say 9:23, because we're not live yet at that time, right? So does that make sense, guys? I just want to make sure that there's no confusion here. It's like literally impossible for you to have an, because you look at the minutes here. I'm not looking at the hours at all. I'm looking at the minutes here, because 23 minutes, it's got to happen at 7. And I'm looking over here. I mean, you won the trade, Martha. So great that you won the trade, but I'm trying to see, like, I'm trying to figure out where your issue is, but there's no trades over here between that time period, right? Like, let me turn off the pivots real quick so I can clear it up, and the high low. So there's a couple buy signals here. There is one right here. There's one right here. Let's do this. So all the buy signals that came up between this period, it's like impossible. There's like no entries that came up between this time right here. So I'm not sure where you took that trade, Martha, but this was not a live trade that we took. So that's where I'm trying to figure out, like, where you're losing these trades, where you're having these issues, right? Because once we figure it out, like, I can help you, reverse engineer, like, and tell you what you can do differently. But for this specific trade right here, there was like definitely no, I'm glad you won the trade, but there was no entry at that time. So let's go to the next one. So you have another buy entry right here again at 7:37. But again, there's no buy entries that came up over here, right? So again, there was like zero valid buy signals. There was one right here at 7:58, but this wasn't an entry because this candle already broke and closed past it. So yeah, so this trade over here that you lost, I don't know where you took this trade, but there was no buy entry there as well. So this one right here, well, I mean, both of them. I don't know where you took any of these entries. Let's go to the third one now. So the third one over here happened at 8:11. So 8:11. Okay, so I could see this one over here that you took, but I think we were already off the live session at this time, because I don't remember being on the live after 8 o'clock on that day. So this trade over here, this is the one that you took. The timestamp looks right on this one. So this is the trade that you took right here. The only problem with this one is that you took this trade after 8. So it seems like a lot of your losses here happen outside the live session. Okay. So I'm looking at the chat right here. You guys said your trade probably came up at 6:23. I'm looking over here at 6:23 and there's still no buy signal. So I don't think there was an entry there either, Tom. So if her trade was at 9:23, that'd be 6:23 my time. I'm going to mark up 6:23 right here. And there's no buy signal in sight. The last buy signal happened over here at 5:56. And there is not another a buy signal until, like 2 hours later or an hour later. Yeah. Yeah, so I'm not sure where this, if you could pinpoint the entry, Martha, that'd be great, but I don't know where you took any of these entries. The only one that I can find here where you took it was at 8:11. So there's an 8:11 trade here, but we already done it live at 8 o'clock. So you took this trade on your own, basically. And I think that's your problem. The problem is either you're entering trades, that are not there, or you're entering trades after the live session, because this one over here came up at 811. And you took a loss there, unfortunately, but this loss came after the live session because I knew we were done by like, let's see if I can go to that time. Yeah, I'm not sure what time we got off the live on that day. But yeah, if you can check, Martha, that'd be great. But so looking at all of your losses here from the 5th, I don't see any of these trades that actually happened on the live. So I mean, if you can figure out like which trade you took, we can analyze it further. But for the most part, you could have avoided these easily if they weren't taken. Okay, so let's go to the 6th. Let's go to the 6th and let's see if we could find, whatever you got stuck with over here. So looking over here on the 6th, this is 6 o'clock. $6:30. Let me check the timestamp for your trade there. Okay, so the timestamp for your trade on the 6th was at 7:48. Let me just go forward a little bit. Okay, so again, right here, Martha, I'm trying to find your entry. And unfortunately, I don't see another entry here. So you took this entry over here at 7:48. You took a loss there, but there's no entry here. So I'm trying to find it, but I don't see any entry here. Your entry came up at 7:48, which is right here. The trade that you took here was a buy entry. And there's no valid buy signals anywhere around this area. So let me see if I can find it over here. Yeah, there were like no buy entries anywhere between this entire time right here. Well, I mean, either way, Martha, like even if your time was different, I looked over here on the 5th and there was no entries there on that day. There was like no valid buy signal. So there was no entries to take for a buy, but you took the 2 buy entries on the 5th. So I'm not sure where you got those buy entries from because there were no valid buy signals, right? So in order for you to have an entry for a buy, there needs to be a valid buy signal. So if you go back over here to the 5th, and I'll chop off the time from like, yeah, let's go over here from 6:30 to 8 o'clock on the 5th, right? So I'm looking over here and there's no buy signal that you could have taken. There was a buy signal right here, but this was it wasn't an entry. Everything else in between where your trade happened. Let's see. Martha said, I tried taking high-low scalps when I didn't really understand the strategy. Okay, so there goes your problem, right? That's why I'm confused because you said you took all these losses, but there's no losses on the live session. You took your own trades and that's why you have losses. So, okay, no, it makes sense, Martha. That's completely fine. But see, there goes the problem. That's why I keep telling you to just focus on one strategy because you keep trying to do different stuff. And it's not just you, so don't feel bad. It's not just you. Other people do the same thing and they don't understand the strategy and they end up, losing trades. So I think the main thing that could fix your problem is to stop doing too much, right? I think that's the main problem for a lot of people. I tell people, if you just take this one strategy, the high-low momentum scalp, you should have no problem. The only difference that you should do is you might not be able to reach your 10% within that time period. But that's what I mentioned with Tom, right? With Tom, he was mentioning, okay, do I have to increase my lot size? Yes, that's the case. If you're taking this strategy only for this month so far, you'd have 10 wins and 1 loss basically for April. So my advice to you, Martha, is to just stick to the strategy. So I think you were trying to do the high-low scalps, and of course, they didn't work out because you didn't understand it properly. So I think that's the problem. Because looking at your trades here, I mean, I looked at all your trades, and they're like none of these trades were actual entries. Looking over here at the 6th, let me see if I can find that entry that you took. Because I don't think there was one here either. So right here on the 6th again, you took one at 7:48 buy, and yeah, unfortunately, I mean, if let me scroll forward a little bit. So your entry was here at 7:48. Let me go forward a little bit. Is on the 6th. So it looks like there was an entry over here at 748. All right, so there's one here. You should have won this trade. I'm assuming you entered this trade late right here, Martha, because your entry came up there, but it actually went past the TP. So it should have hit your TP. I think this is the one that you were talking about, the random spike. I think you just entered late. So the entry happened right here. And unfortunately, you entered late. So my advice to you would be, for one, stick to one strategy, right? Just stick to the high level momentum scalp, or stick to our live session trades. That's going to be step one. And step two is, if you miss the trade, like say, for example, the trade comes up and your price is already in profit, just skip it, right? Wait for the next one. I know it's frustrating because you're waiting for a trade pretty much all morning, and then you probably were just not paying attention for like 1 second. And then it's like shoots up in profit and you get in kind of late. Because right here, it looks like, yeah, you'd lose this trade if you got in like right there. See, so the candle closed down here, but if you got in like, maybe a split second later or a couple seconds later, and price was already above here. The problem with this here is that you have to cover the spread too. So that's something that you have to keep in mind. So when you enter this trade here, it looks like, so you should have entered down here where you would hit your TP, but it looks like you might have entered a little higher, which was like somewhere here. And then on top of that, you have to cover the spread too, right? So you got to cover the spread, plus you have to also get in at proper entry. Because if this is the case here, then yeah, you for sure, if you got in this late, so say you got in this late, plus you have to cover the spread, that goes up a bit higher. So that's kind of what it seems to happen. And this is where I can see where you said, okay, price spiked, and then you end up getting, on the wrong side of the market. So, my main advice to you would be to, for one, just focus on one strategy. And for two, if the trade happens to come up and you miss it, just skip it and wait for the next one. I think that's the best case scenario for you to like moving forward, because the last thing you want to do is keep taking like trades like this, and then you just end up digging yourself into a deeper hole. So yeah, hope that helps. But let me go and show you an example of the liquidity pushes. But again, I don't think this is something that you should personally be using until you're ready for it. So let's see. I think we have. Let me see if I can find an example here. So this is from today. Let me just rewind to here. Okay, so basically, well, it wouldn't really work out today because there wasn't a bias. In order to take these liquidity pushes, you have to have like you have to have a strong bias. So I think today there wasn't really much of a bias. If you guys remember, the fundamentals are pretty much flat. They're like below 100 points, and then on top of that, retail sentiment was okay, and then it started to loosen up middle of session. So let me see yesterday's market real quick, because I think yesterday we had a little bit of a bias. It wasn't super strong, but it was a bias, in our direction. So, and I think it happened later on in the day, like right here. Okay, so basically the way that these liquidity pushes work is, so yesterday we had a pretty strong bias for a buy, right? If you guys remembered yesterday, I took a couple trades with you guys. They were all buys. So these are from yesterday, right? I took 3 trades yesterday because the bias was very strong for a buy. So I pretty much caught these bounces to the upside. So in order to identify these liquidity pushes, typically what you do is you would draw lines at these highs. Basically the highs that have not been tested yet. So this is how you would look up liquidity pushes, or this type of strategy. Basically, you're looking for areas where people place their stop loss. So the reason for this is because if you guys remembered on Monday, retail sentiment was like 70% short, and everything was bullish. So we had bullish technicals on the higher time frames, and then on top of that, we had bullish fundamentals, and then on top of that, we had like a 70% retail sentiment for short. So that indicated that 70% of retail traders were selling. So whenever retail traders are selling, you typically want to identify where their stop losses are, right? So say, for example, they entered a sell right here. they're going to place their stop loss at the previous swing, right? Which would be right here, or it'd be up here, or it'd be up here, up here, up here, up here, etc. The areas where you see a lot of liquidity or areas where stop losses are sitting are going to be where the lines are really close. So for example, here, this one's standalone by itself. I wouldn't really identify this as a strong liquidity zone. I would just identify this as, a high. This area would be liquidity. I'll leave this one alone. This here would be considered liquidity to me as well. And this would be the end of liquidity. So the way that I would personally take these trades is I would wait for price to come and touch this area. And then I wait for the confirmation of price to push up here. If price pushes to this area here, this is where I enter my buy order. And I pretty much ride it to the next zone up here, right? So I'll show you how price pushes up right here. Doesn't really push up too smooth. It's kind of choppy. Okay, so right here is where I was looking for him. So you guys will see right here, price pushes to this level right here, right? As I mentioned, I'm just gonna consider this somewhat of a high, not necessarily liquidity because there's no other levels next to it. However, this one over here has a pretty strong area, right? So from this point, I have like a buy stop there, or when price reaches this point, I would just hit buy. And right there is where price hits liquidity, right? Price hits that area, blasts right through. And the next area of liquidity is going to be up here. See how price hits that area right there? If I didn't enter at this area down here, I would enter at this area up here. So I would just catch it as it pushes up higher from that point. And right there, it pushes right through and knocks out all liquidity. And then look where price pushes to here. All the way to the end, right? So I pretty much showed you guys how to identify that. It's very simple. The reason why we were able to identify this is because we knew that everything was very bullish. We had a strong bullish bias with regard to the higher time frame trends. We also had a strong fundamental bias. It was up 100 points. And then also technicals were up very strong as well. So all I did here was I identified where everybody's stop loss is sitting. So if I see a bunch of retail traders who are selling, where their stop loss is going to be, it's going to be around these areas right here where liquidity is sitting. So that's how I would identify liquidity pushes. But again, Maria, I wouldn't recommend you apply this. This is a more advanced way of trading. Like if you can't get the basics down, this is going to be like way complicated for you. So first, I would recommend sticking with the basics. And then in the future, this will be something that you can implement in, right? This is really an advanced way of trading. Like I was going to create a different group in the future where we trade these advanced strategies. But I don't want people to like get too ahead of themselves. So as you guys can see, it's an easy way to identify this stuff. But the only time to take these types of trades is when you have a strong bias. So say, for example, you have everything here that's very bullish. Like the 4 hours has been bullish for like months now. 1 hour is bullish, 30 minutes bullish. If these are all bullish, plus you have fundamentals over here, which are bullish. They're not bullish right now, but if this here was like up 100 points, great. And then on top of that, you want to make sure that you're looking at where retail traders are trading. So right now it's currently 68% short. This indicates that 68% of retail traders are currently selling. So in this case right here, if we had a strong bullish bias, I would again do the same thing, but I just wouldn't do it right now. I would do it tomorrow, basically. So again, right here, like check this out. I can go and draw out my liquidity areas right here, so that tomorrow I'm already ready for these liquidity pushes, right? So I'm fine if price drops from this point, like say like all night, price just continues to drop lower and lower. That's completely fine. I actually want that to happen. I want price to keep going lower and lower and lower. So tomorrow, these areas of liquidity are probably going to get hit, right? So eventually I'm expecting price to bounce and make its way all the way back up to knock out all of this liquidity. So that's one way to prepare for liquidity tomorrow. But, again, it's not really necessary. It's more of an advanced way to trade. It is lucrative, but it's an advanced way of trading. You have to actually know how to read the charts like how I do and use my indicators properly to identify these things, because this pretty much simplifies everything for you. Let's see, Martha said, there's a difference between understanding a strategy in the videos and applying it successfully. I think I understand something. And then when I implement it, it doesn't pan out. Yeah. So you're going to learn more from applying it. And I'm sure you've already gotten to that point, Martha, right? Because I'm pretty sure you think you get it from watching the videos, but when you actually when you actually do it, it's different, right? Because your emotions are involved. So, the best way for you to get better is to just practice, and make sure that you practice during live market conditions. So what I would recommend is, if you're practicing, just open a demo account or a trial account with FTMO and just play on that account. Don't play on your challenge, because if you play on your challenge, you don't want to be experimenting on your challenge, of course, because then you're going to dig yourself a deep hole, kind of like what you did now, which, lesson learned. Now, in the future, if you're not ready for the challenge, there's no need to rush it. Obviously, eventually you're going to be ready for it. But, at this moment, if you're not like 100%, then just don't bother doing a real challenge yet. Just do trials until you're ready for the actual thing. Because, your trade psychology is going to get tested basically every day. All right, so I think that's it with your questions right there, Martha. If there's anything else that you want me to go deeper into your question, just let me know. But I'm going to scroll up and I'm going to see what other questions we have here. Or let me just follow up with CJ's question right here, because he's discussing the specific strategy. So CJ is asking, so liquidity pushes use the same rules as a high-low scalp, but you can enter sooner. Yeah, pretty much, CJ. Liquidity pushes are pretty much like the high-low scalp, except so the main thing that you're looking for here is where liquidity is bunched up together. Like this one over here, I'd consider this liquidity because they're right next to each other. This right here, I wouldn't. And this right here, I wouldn't. But this here, I would. Right, so when they're bunched up like that, that's where I would identify liquidity. And what you can do is, if you're looking for liquidity, instead of going for price to break and close past it, you can just enter as soon as price touches it, like right there. Because typically when price hits liquidity around that area, CJ, it's going to blast right through it, right? So price is pushing up slowly. Like this is typically what happens. Say price is pushing up from here. It'll go up a little bit, go up a little bit, slow down a little bit, go sideways here. And then as soon as it gets to this point, blast right through it, right? And then it comes back down. And then it comes back up, comes back down, and then blasts right there. This is like the typical pattern. This is how you'll see the candles typically move. Go up a little bit, pull back, go up a little bit, consolidate, break out, come back for the retracement, range for a bit, and then blast through to the next level. So yeah, you can enter right away. That's why it's a little more risky, because if you don't know what you're doing, you're going to miss the move, or you're going to enter late. So yeah, that's one way that you would apply it. Yeah, Martha said consistency takes time and practice. I've been trading live 12 days and I'm not expecting it yet. Yeah, no, exactly, Martha. Like you can't expect to be a professional trader right away. And I'm sure you understand that. For me, I've been trading for over 10 years now. So that's why like this stuff comes natural to me. Like I don't even have to think about it. If you guys ask me about any strategy, then I can show you it like off the top of my head, because I've been applying these strategies for years now. So for me, it's easy to show you, and I make things look simple in the live session, but realistically, it's not that easy. I mean, it's easier for me, but it's not easy for majority of people out there. If that was the case, then everybody would be rich trading, right? Trading's not, it's not easy. It's just that you get better at reading the charts, and you get better at using confluences and different types of, I guess, checklists to confirm, your trade's actually going to work out. See, question from Dan. Dan's asking, do you avoid if sessions are around liquidity? Yes, that is correct, Dan. So for the liquidity pushes, you do have to take into account the red flags. Where are my red flags? Right there. So yeah, you'll still avoid trades whenever price is in your sessions, your opening price, your news price, candle prior to entry is too large, prices ranging, etc. You would you want to avoid trades around those areas, because, so let me clean this up a little bit and let me turn everything off, just so that you guys can see what I'm like, why you would avoid these entries. So like, Dan's question is a very valid question. He was asking if you would avoid trades around sessions. And this is exactly why. So look, when price gets up to the session right here, what happens, right? Price fakes out and it comes right back down. So price pushes up, gets to the session, breaks and closes past it, makes you think price is going to continue, then it comes right back down. What happens right here? Price gets near the session, fakes out, comes right back up. Price comes to this area, fakes out, comes right back down. What happens right here? Price drops even further, but it makes a huger fake out. Down here, it goes down, fakes out, and it comes right back up, right? So see where the market's moving smooth? The market's moving smooth in between the sessions, right? Easy push down, easy push up, easy push down, easy push up. This is where you want to trade. You want to trade in between the sessions. You don't want to trade at the sessions because typically the sessions are where manipulation happens. Price will either break past it or it's just going to bounce off it. So you don't want to take any trades when price gets near the sessions. And this is a clear example right here. Right, so look, check this out right here. So this is from this morning, right, 6:30. Look where market happened, where it happened to push from this area down, right? Perfect push right here. Price got down to the sessions. Oops, wrong tool. Price got down to the sessions, fake out or reversal actually, pushed right back up. And then look what happens when price gets near the sessions again. A bunch of consolidation, bunch of ranging, not a good area to trade. So, this is the whole reason I created this indicator. I created the indicator so that you guys can avoid manipulation. You guys can see where the manipulation happens. It all happens around the sessions. So for future reference, just avoid the sessions. Because if you don't, you're probably going to get caught in a fake out. And you're going to be really upset because you could have easily avoided this trade by avoiding the sessions. So, all right, that's it for that question right there. Let me scroll up real quick. All right, the other question here is from Madhu. So Madhu is asking, sorry, let me scroll up, guys. Got a lot of stuff here. Let me scroll down a little bit. Yes, the next question is from Madhu. Madhu said, I haven't been on the live in a couple of days. Any expectations or predictions for how the market tomorrow? I know it's a light news day during our session. Let me check real quick. I think there's a lot of news tomorrow, isn't there? Could be wrong, but actually, yeah, it is a light news day. So what I would look for tomorrow, I'm gonna do, because there's no news, market might be a bit flat, but we do have the Fed speaking tomorrow. Fed member Goolsbee is going to be speaking at 2:30. This is outside of our live session, so it's kind of relevant. We might get a push right here with crude oil inventories at 7:30. So here's the problem with this here. Typically, these news events don't really affect us too much, but if you guys have been following the news, Russia went into a deal with Saudi Arabia with regard to oil. So if they're going to be buying oil from Saudi Arabia, it's going to hurt, U.S. oil inventories because people aren't going to be buying oil from the U.S. anymore. If you guys have been following the news lately, a lot of stuff's been like not going well for the U.S. Like a lot of the countries are starting to no longer use the U.S. currency. People are not purchasing oil from us anymore because, Saudis is selling their oil to basically all of Europe. So this typically doesn't affect the market very much, but I think this might affect the market tomorrow. So you might expect a spike. The only reason I'm saying this is because if you guys remember the oil news from, when was it? There was oil news that was either last week or on Monday. I think it was last week. I'm going to search oil. Yeah, so if you guys remember Wednesday of last week, we had the crude oil inventories that came out at 7:30. This usually doesn't spike price very much. But if you guys remember from the 12th, there was a huge spike in price. So although we don't have high impact news tomorrow, I think that oil news might affect the market to some extent. It was like right here on the 12th. It was during our live session too. Yeah, it was like right here at 7:30. If you guys remember, last Wednesday, we had the oil news that came out right here. We were like, okay, this trade's probably not going to do anything right. We were actually in a trade. I was in a trade at this time, and I actually lost this trade because it spiked down. So typically, oil price doesn't, or the oil news doesn't affect the price too much. But that's when the news came out that Saudi Arabia went into a deal with Russia, where like Russia is going to basically buy oil from Saudi Arabia, and they're going to be supplying basically all of Europe. So that's why this big spike happened right here. So I think that's the big thing that might affect the market tomorrow. However, I think it's going to be bullish tomorrow. So what I think might happen tomorrow, Madhu, is, as I drew the liquidity areas over here, I think price will probably drop a little bit, but eventually it'll swing back up. So let me go over here and clean this up a little bit. All right, so this area right here is going to be liquidity. All right, so this is kind of what I see happening tomorrow. The reason why I see this happening is because the sentiment is so high. So sentiment's currently 68%. I mean, it's not super high, but it's 68% short. So what I see happening tomorrow is we might see a drop based off the news. So, because I'm assuming crude oil inventories is going to be negative tomorrow. So for tomorrow, we have crude oil inventories where's it at? Crude oil inventories at 7:30 tomorrow. I'm expecting this to be negative. So what I kind of see happening here tomorrow is we're probably going to see price come down. It's going to test this low over here. And I think once it tests this low down here, it's going to spike right back up. That's what I see happening, just from my perspective. It's all speculation, but that's kind of what I see happening. The reason for that is because sentiment here is very strong. They're not just going to drop price and then let all these retail traders make money, right? I mean, their goal here is to pretty much flush out these retail traders. So that's my perspective. I mean, it might happen, might not happen, but that's kind of what I see happening. Like tomorrow, I'm probably going to look for this to happen. I'm going to look for price to spike down due to manipulation, and then I'm going to buy the dip right here. I'm just going to write it up. So that's kind of what I see happening. Hopefully it does play out, because if it does, I'm looking to make a killing tomorrow, hopefully. But I'm not going to get greedy with it. So I'll probably take a trade here where I'm probably going to get out quickly. Yeah, because it's a pretty big drop. Yeah, I'll probably wait. So what I'll probably do here is I'll look for price to come down. I'll look for it to reject off this area and then give me some sort of entry point. So if I see like a V1 variation off this lower point here, then yeah, I'll take that for a quick push for maybe 100 pips, 200 pips, 300 pips, somewhere around there, probably 300 pips. I'll go for a bigger push because I'm expecting a pretty nice push when it does get down to that area. All right, so yeah, no problem, Adu. So that's it with that right there. Let me see if there's anything else here that I'm missing. Let me scroll up real quick. Scroll down. Next question is from, all right, so D said, when you get a chance, can you show how to set a buy stop on a quick trade manager? So you can't do it on a quick trade manager, D. And I can't show you my MC4 here because if I pull it over, it typically corrupts my file. I'm on a Mac, so I have it set on a separate screen. And typically if I put MC4 on my main screen right here, it usually corrupts it and then it freezes up. And then I have to go and reinstall the whole thing. So in order for you to set a buy stop on MT4, it's kind of similar to TradingView. You're just like, say for example, this is your MT4 screen. I know it's TradingView, but it's the same thing. If you right click on your chart, you're going to have an opportunity to put an order right here, right? So if I right click right here, you go to trade and then it says buy stop, right? Buy this with the stop order. It's the same thing with MT4. If you right click on your chart, you go to trading and it says the same thing, buy stop. So you can try that D on your screen. It's not very difficult. You just right click on your screen, but it's not a quick trade manager. So when you type in the buy stop, you still have to put in the parameters. So it's not as streamlined as just clicking buy and then having it set up. you have to right click on your screen. You go to trade and then it'll have buy stop. And then if you have that right there, a box will come up. And then, or no, typically what will happen is if you click on the chart, you hit buy stop. If you do that, you're going to have a line that comes up on your screen. So basically wherever you want the buy stop, D, like for example, let me show you like from the liquidity areas that I marked up here, right? Let me see where that area was. Okay, like this one right here. So say, for example, you want to put a buy stop right here, right? You'll basically just look at the same candle on your MT4. The candle should align with the same area. So you'll see the candle there. And what you'll do is you'll just go up to that area right here. You'll right click, click trade, buy stop. And then as soon as you click buy stop, like you go to trade and then hit that button right there on MT4, a line's going to come up. That line's going to be your pending order. So in order for you to change that, you'll just right click on it and then you'll go to edit order. And then from there, you can put your TP stop loss. So if the price right here is 34,144, if you want to go for 100 pips, you're just going to put your TP at 34,155. It's just basic math, right? You just add 10 to it. That's where you'll set up your TP. And then for your stop loss, if you want a 300 pip stop loss, you just subtract it by 30. So you put 31,130 or 31,111 because that's going to be minus 30. So that's pretty much how you do it. It's a little tedious, but you know, if you do it a couple of times, it becomes really easy. Like for me, I can do it on the live session without even thinking. I just right click, buy stop, double click on it, edit the order, add 10, minus 30, and it's pretty much set. So I would practice with the demo account first or a trial account D before you do it, because there's a lot of room for mistake if you misclick something, or if you're like, or if your math is kind of like not as quick as it should be. My math sucks, so for me, I have to like really think about it sometimes. Or I'll just use a calculator if I have a calculator near me. Yeah, exactly. D said, I feel it's necessary on those huge candles instead of entering right away. Yeah, because the problem when you enter right away is you get caught in slippage, right? So that's the big problem. If you set a buy stop, that's why lately, that's what I've been doing. I know it's not super simple for a lot of people, but typically that's what I'll do. I'll just set a buy stop quickly. Or what I'll do, what I'll also do, D, is I'll set my buy stop there. So I'll go click trade buy stop, and then I'll just exit it manually. So say, for example, it enters my trade. I'll be right there and I'll see the trade button. And then when it gets to 1,000 profit, I just click the X and I'm out. That's how I do it sometimes too. That's why sometimes on the live session, you guys will hear like a little click sound or like a thud, because that's my MT4 manually exiting, because I'm just clicking out of it. All right, so let me see if there's any other questions here. I think that's all the questions for here so far. Let me see if there's anything else on the YouTube. So Barty said, Sean, your trend meter works fire. What's your current strategy? It's the same strategy that we've been applying pretty much during all the live sessions, Barty. So like the main one that we apply here for the live is going to be the high level momentum scalp. That's pretty much the main one that we've been applying for, I think, the past 2 or 3 months now. The reason why I like this the most is because it's the simplest, right? For this specific strategy right here, you don't have to look at too many things. A lot of our strategies in the past, like if you look at the high-low scalp, this is like one of the favorites that we have. But I think one of the hurdles that we have to get through is confirming overall bias, because this doesn't always have, it's like typically there's not an overall bias. So it's hard to find this lined up. So this is like one of the hardest strategies to apply, because if this isn't here, then there's no entries for us to take. But for the most part, this one here doesn't require anything. We don't really require any red flags or anything like that. The only thing is that there's nothing in between the entries. So it's just a straight push. So like typically if we have an order here, we want to look for, you know, like say a lower low, or this isn't an entry, like a higher high, sell signal, break and close past pivots, and entry. So that's what we'd be looking for. But all right, guys, if there's any other questions, feel free to put them in the chat. Otherwise, I think we'll be done with this session today. I don't really see anything else here. Let's see another question from Barty. Barty's asking, do you do momentum scalp? No. So if it's not this, then we're not doing it, Barty. This is the only strategy that I'm applying. It's called the high-low momentum scalp. If you're talking about the original momentum scalp, I haven't really been taking it because it was difficult for a lot of people to follow along because you needed 3 charts, right? I mean, it still works. Like, for example, I mean, you could still look for momentum scalp here if you wanted to, but there's no overall trend. So if you look at the market from today, this morning, there was a sell bias here, obviously. So if you're applying the momentum scalp, I mean, there were still entries here. Like there was one right here. That was a full TP. It still works fine. One right here, full TP. There's 3. Okay, so one entry right here, full TP. Another entry right here, full TP. So the strategy still works fine. It's just harder for people to follow because you need to have, multiple confluences here to confirm that. But yeah, the momentum scalp here still works perfectly fine. There was one here that looks like it did not hit, but the candle is pretty big, so I don't think it's one we take anyways. Yeah, the candle here is just too big. So this one right here would have been skipped. But other than that, it looks like they all hit. There's another one right here. It looks like this one also hits. Yeah, pretty solid. So the momentum scalp works. I just don't apply it now because we're only focused on one strategy. The thing is, I know all these strategies very well, but not everybody in the group does. So I can't be applying like 30 strategies at once, right? Because I have a whole list of strategies here. And, you mentioned one of them. I think if I was to focus on a couple strategies here, it would be the high-low momentum scalp. It would be the momentum scalp, like you mentioned, the high-low scalp, and SR rejection. Yeah, so if you were to ask me like what strategy, and I get this question all the time, like, what strategies would I focus on? I think these are like my favorite because they work in different conditions. These plus momentum scalp variation and momentum scalp. But if you're applying the momentum scalp, I would recommend that you that you use both of the criteria. So the momentum scalp variation, I'm trying to find it here. I forgot where I put it. Okay, so momentum scalp and momentum scalp variation. You'd have to take these in order, or you have to make sure that they follow through in order. So if you were to take these two here, momentum scalp variation, momentum scalp, you got to make sure that momentum scalp variation actually plays out. So you want to make sure this here plays out, and then you would take the momentum scalp. However, these 3 right here would be the main ones that I would focus on. This one right here is all around. So this is why this is the main strategy that we apply. Momentum, the high-low momentum scalp is like all around. You can use this in all market conditions. The high-low scalp, this applies in very strong bias conditions. So if you have a very strong bullish bias, you could take buys very easily. Or if there's a strong sell bias, you can take all sells easily. So this strategy here is all around. This strategy here is in heavy trending, heavy bias market. And this one right here, the SR rejection, is good during sideways market. So if the market's going sideways, this is the strategy that you would apply, right? Because this is the strategy that I created during the summer. Because during the summer, you get a lot of sideways movement. This strategy here is perfect because you don't get a trending market during the summer. So yeah, if you were to ask me what I'd take, it'd probably be these 3 right here. And then on top of that, if you wanted to include these here work in confluence with each other. D said it would be awesome to see a day where you just go to town on the charts and explain what's going through your head. So that's the thing. I can't do that. If I'm going to town on the charts, I can't be wasting my time explaining everything to you guys, right? It's either I go to town on the charts or I explain things to you guys. I can't do both because if I'm doing both, I'm doing so much at once. I'm analyzing the charts. I'm taking entries. I'm taking like 30 entries but then you want me to explain, and not just you, D. And I'm just saying this because a lot of people have asked that before. It's either I focus on the charts and I just trade, or I explain to you guys what I'm doing. Because, you know, even explaining the very basic strategy, the high level momentum scalp, I still have to break this down for people, even though it's such a simple strategy. So yeah, I could go to town on the charts and I can just take all the trades that I see that come up. But if I do that, I can't really explain to you guys because these trades come up too quickly. You know, we're trading on the 1 minute chart. So like if I was to look at the charts over here, so let me go back to, because this is something that a lot of people have asked. They've mentioned that because I do miss out on a lot of trades, and you guys will see like every day, a lot of people in the group profit a lot more than me. Like Brock here profited like 3,000. Patricia locked in like 3,000. Kip over here locked in like 3,000. You know, Kip locked in 2,000 on this account. So like if you compare everyone else's profits compared to mine, a lot of people are actually making a lot more than me because I'm not able to focus on the charts as much as you guys are. Because for me, it takes a lot of effort for me to explain everything to you guys. And then I get like a million questions about the same thing, right? So like, for example, if I was to trade by myself, which, you know, it might happen eventually. At some point in the future, I might just start trading by myself and you guys can just watch because I do plan on closing the signups at some point because I am giving away a lot of profits by wasting, not really, I don't want to say wasting because I'm not really wasting time. You guys are definitely helping me stay consistent with my trading. But it does take away from me being able to just take whatever trades I like, right? So if we were to just focus on like 6:30 until 8 o'clock. So 6:30 to 8 o'clock. And I'll show you all of the different entries that came up here. So from 6:30 to 8 o'clock, let me scroll down real quick. There's nothing here. Okay, on this one right here, I'm going to show you there's an entry. I didn't take this entry because these are different strategies. The problem with me taking this here is that, and you haven't been in the group long enough, David, or fuck, I don't even, I can't, I forgot what your name was, D. I forgot your name, if your name was David or Dan, or maybe they're Daniel. Okay, there it is, Daniel. Yeah. So Daniel, I could have taken this trade right here because this here actually fit the confluences. It was bearish across the board. This here followed under a momentum scalp entry, a pivot scalp entry. And I forgot what else. I think just those two entries. So this candle right here was a pivot scalp and a momentum scalp. This is what Barty asked earlier. So some people actually took this trade here because they know the strategy, but I didn't take it because I don't want to confuse people in the group. And the thing is, you haven't been in the group long enough, but like in the past, a lot of people would complain if I would take trades and not tell people. Like, for example, today I took a couple trades, but there was no official trades, right? And there was people complaining about that, saying that I'm trading without telling you guys what I'm taking. And they're just getting upset because they want to make profits too. Like there was no official trades today, but I took 2 trades on my own, right? Applying the V1, V2, the V1 variation over here. And for me personally, I just don't want to deal with it, right? I don't want to deal with people complaining. So I don't necessarily tell you guys about these entries. I'll explain it to you guys, but I'm not telling you guys, okay, I'm taking this entry here. Because what happens is people don't understand the strategy. They end up taking something that's not even there. And then they lose the trade and they want to look for someone to blame. So right here, you know, there's an entry. There was about like 3 entries that came up right here. And then there's another high-low scalp right here. So let me show you real quick. Actually, there's no high-low scalp here. I thought there would have been one, but there wasn't. So there's no entry there. This right here would have been a momentum scalp variation. So there's actually a lot of entries that came up today. There's another one right here. This red candle, because this candle closed above. There was a buy signal. Price closed back below right here. And this would be a momentum scalp variation. So there's one strategy right here. Momentum scalp variation. There's another entry right here, pivot scalp, momentum scalp. There's another entry right here that I actually took. This is a V1 variation double body. So this is my first trade that I took. Another full TP. There's another one right here. double body rejection. Not one I would take, but if you know, I know some people that did take this or would have been okay taking this trade. So you can see there's a lot of entries here that came up. Price came back up right here, another double body rejection right there. That's another V1 variation. So there's a ton of opportunities in the market. If you guys know my strategies, there's a lot of opportunities here that you guys could have taken. Price drop down right here. This is the other entry that I took, V1 variation again right there. Another full TP. So there's a lot of entries here that came up using my strategies. Price came back up right here. There's nothing else around this area. Candle here was too big. You wouldn't have taken this for a pivot scalp. It's just too big of a candle. And that's about it. That's until 8 o'clock, right? So, you know, I can just mark up what these entries were. So for this one right here, this was a momentum scalp variation full TP. That's one entry right there. This one right here is a hit scalp full TP, momentum scalp full TP. And these are the strategies. So if you guys want to go and rewatch the videos for these strategies, you guys can learn them, right? They're very simple. Another one right here. This is a V1 variation scalp full TP. And these are all strategy videos that are available in the course. So if you guys want to watch these videos, I'm telling you exactly what entries are coming up here so that you guys can look. Another one right here, V1 variation. Right here, another one. And you can see they come up very often. The V1 variation scalp. This used to be one of our main strategies that we used to apply. The V1 variation. Had to change it up a bit because people would get confused. Another V1 right here. So there's a bunch of V1 variations that came up right here. And that's it. So you guys can see right here, momentum scalp variation, full TP, pivot scalp. These are two different strategies in one. Pivot scalp, momentum scalp, V1 variation, V1 variation, V1 variation, V1 variation. This is actually not a, or no, this was a V1. Yeah. So these are all the entries that actually came up this morning. There is 1, 2, 3, 4, 5, 6 back-to-back wins if you took any of these entries. So if you guys look back at people's timestamps, there was actually a lot of trades here that could have been taken. Brock here took like a bunch of these sells here. I think he took majority of them. So you can see it took 1, 2, 3, 4, 5, 6, 7 trades. He took 7 trades because he traded after the live, but he took basically 5 trades right here that lined up with these strategies. You know, Brock's one of our older members. He's been around for a long time, so he knows the strategies that come up. Dave here, you know, Dave just joined us like this last weekend or on Monday, I think. Dave like literally just joined the group and he's been killing it every single day. Kevin over here, he does his own thing. It's kind of similar to what we're doing. His is a little more, so he does a little more riskier. The way that Kevin trades sometimes is he likes to just catch these bounces. So like, for example, here, whenever price comes up and bounces off the pivots, he takes a trade and he just holds it. The thing that Kevin does is that it's very risky because he doesn't really use a stop loss. I would never recommend that for you guys. You know, he says he uses his personal account, so it's not a big deal. He doesn't run into a max drawdown, but he can like literally blow his account if it doesn't come back in his direction. So you can see he takes a lot of trades here. He takes them very quickly. He just stacks his trades. So you can see over here all the timestamps from his trades. He takes them all at the same time. So he takes about 1, 2, 3, 4, 5, 6. He basically hit his sell button 6 times and then just waited for it to come down. Same with these right here. So he trades a very risky way of trading. I don't recommend anybody trade that way, but you know, he knows what he's doing. So it's fine for him to do that. But yeah, so, you know, as I mentioned, there's a lot of strategies here. If you guys have access to the course, as I've mentioned, you just scroll down and they're all here under the scalping strategies. Yeah, right here, scalping strategies. So we have triple confluence, high-low scalp, pivot scalp, variation V1. These are the 3 main strategies that I just discussed. And then if you scroll up higher at module 4, you'll see right here that the momentum scalp variation and momentum scalp right here. So a lot of different entries that you guys can use. I mean, it's pretty endless. Like if you were to learn majority of the strategies and just apply them when you see them, you could make like a ton of profit because there's so many different entries that come up and all the strategies work very well. So, all right, I think that might be it. If you guys have any other questions, feel free to put them in the chat. Otherwise, I think this is about it. We've been on this mentoring session for about an hour and a half, so I think it's about time to call it a day. All right. Sorry, guys. If you guys have any other questions, feel free to email me. You guys can email me at sean@kodikaitrades.com, or you guys can message me on Telegram. Either way, I can get in touch. But I think that's about it. So, all right, guys, have a